Welcome to CNBC's Crypto World. I'm Brandon Gomez. Major cryptocurrencies are in the red to end the week, with Bitcoin trading under $107,000 as of noon Eastern. Ether fell below $3,800 and XRP dropped 2.5%. According to a JPMorgan note yesterday, crypto native investors are likely behind the correction in crypto markets since last Friday. Analysts also noted that unlike Ether, Bitcoin CME futures and spot Bitcoin ETFs have not seen significant liquidations since then. Over the past 7 days, Bitcoin was down 8.5% as of noon, facing back-to-back weekly losses and its fourth weekly loss in the past 5. This week marks Bitcoin's worst since February 28th of this year, when it fell more than 11%. Ether was lower by more than 5% over the past 7 days, posting consecutive weekly losses and its fourth weekly loss in the past 5. XRP was down 14% over the past 7 days, also marking back-to-back weekly losses. Now, taking a look at crypto-related stocks, Core Scientific and CoreWeave, both down more than 5% at noon, as shareholders prepare to vote at the end of the month on the cloud infrastructure provider's plans to acquire the Bitcoin miner. But that plan has hit a snag. Core Scientific's biggest shareholder, 2C's Capital, reportedly opposes the deal, saying it undervalues the miner and exposes shareholders to substantial economic risk. The deal's uncertainty has hit the stock, along with the ongoing challenging market for Bitcoin miners, despite the potential benefits of the acquisition. Earlier this week, Core Scientific's board reportedly urged its shareholders to vote for the crypto miner's proposed sale to CoreWeave, which takes place on October 30th. All right, jumping straight to our main story, Crypto World's Jordan Smith spoke with Charles Edwards, founder and CIO of Capriole Investments. Back in August, Edwards put out a report called The Treasury Company Bubble, where he warned that digital asset treasuries could reach saturation and face a, quote, volatile unwind. He discusses that report with us as more and more DATs come to market.
So let's talk all about these DATs that are popping up everywhere. We hear more and more about them every day. How did we get to this point? Because I feel like it's really a 2025 story that these digital asset treasuries are going public in such fervor right now.
Yeah, it's a perfect storm. We have about 186 DATs right now. And I think it's two main factors. First, we have MicroStrategy, which was an amazing success story the last 5 years. They outperformed the entire S&P 500. And they basically did it by buying the best performing asset, Bitcoin, and arbitraging low cost of debt from traditional finance markets. They've beaten NVIDIA and everyone through that period. So I think people have looked to that as a case study and wanted to replicate it. That's the first element. The second is, I think, the perfect storm on the political and legislative side. We had a change of administration, obviously, in the US at the start of the year, and that really signaled the green light, the on-ramps to capital into crypto. Rewind 2-3 years, it was very hard to move significant money in this asset class. A lot of the banking on-ramps were not functional and shut down completely. And that completely flipped. We've had 5 or 6 legislation pieces through that period as well that have supported crypto, whether it be the Genius Act or the US Treasury Reserve for digital assets. So I think institutions now have the comfort that